The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Sorry about that, you guys. I was sitting up here. I was talking to myself why nobody was responding. How's everything going, everybody? Glad to have you guys on. That's good. That's good. That's good. I'm very glad to hear. Very glad to hear. From the records, I've been getting text messages, emails. Everybody that I talk to, you guys are doing excellent. So I'm very excited about that. I'm just going to be real quick with our general housekeeping news and all that stuff. Those of you, some of you have been receiving, well, some of you have gained access to the members area. Kudos to you guys who have gained access. Those of you who have not, know that I'm doing one person at a time. It's a manual thing. It's not automatic, especially since I had incorporated or, I had the system in place after a lot of people had already joined. So this is the price that I have to pay when it comes to doing things out of sequence. I had no idea that it was going to blow up to be this big, but I should have known because I'm very anal about having things done the right way. Nonetheless, it's well worth the wait. For those of you who have gained access, I'm sure you're able to see that it was well worth the wait. And I was a man of my word, and I kept everything, every word that I promised you guys. That's just how I am. So I want to let you guys know that I really appreciate you guys for being patient with me. Nothing is done overnight. So for a man to actually keep his word and make good on it within a day or two of his projected completion date, I mean that right there is fantastic. So just know that for those of you who have not gotten to or have gained access, I will give you guys access. I have to do everything manually. So it only takes probably about a minute to get one person connected, but it's just constantly going back from one system in my office to the other. So it can be a little time consuming, but I'm not complaining. I'm happy to have those who have been connected, and those who have not. I'm anxiously awaiting for you to be connected as well. So let's go ahead and move this thing forward. I'm going to do something, you guys, because I want to know something. I want to know something. Who on here took the GDP NZD trade alert that I put out? So let me ask a dumb question, and no offense to anyone that did the opposite. Well, let me ask this: who put in a sale?
Oh, no, bye.
I hope no one put in a sale. Did anyone put in a sale? Okay, I got you. Okay, yeah, that's fine. That's fine. All right, so everybody made money then. For those of you who actually for those of you who actually put in a trade, who traded on it, you guys made money. For some reason, that's weird. Okay, that's good. That's all right. That's all right, Keisha. It's okay. It's okay. It's all a learning thing. Great, great. Now I don't know if you guys caught that when I anytime I do anything with the group, I might post it on YouTube. All right, but you guys will always know first. All right, you guys will know first all the time if I put out the trailer. Well, I'm talking about the trailer alert. So if there's a trailer alert, you guys will know first. That was let me go to it real quick. Just let's just do a little quick recap because that was really a fantastic move. And if you guys might see, the current day candle is actually it pulled back a little bit. For those of you that know, this is something else. Oh, you know what? Let me start recording this. I apologize, you guys. Let me start recording this. Let me record this. I don't want to forget that. Record. All right. So let's go ahead and get started. A lot of you guys made money on this EVP and TV. That's great. So when I want to show you guys, and I want you guys to back test this as well. If for those of you that do not know, at the end of any hour, usually there's a pullback. All right. So be mindful of trading, getting in on a trade at the end of the hour. You might see that just like this candle here, you might see that it's going long, but at the end of the hour, maybe 5-10 minutes before, there will be a nice pullback. All right, so be mindful of that. If you guys want me to show you, we're 10 minutes into the new day candle, and let's go back 10 minutes, let's say 15-20 minutes of the minute chart, and let's see if that's when the pullback occurred. See this? Just before the hour is over, it pulled back. Let's see, this was the new day. This is just before the end of the day, the last minute. Great pullback of 20-some pips. Now this isn't just on the GBP and ZD, this is across the board. But I would say back test it, make sure that the pair that you love to trade, that it pulls back more often. Keep in mind, at the end of the day, that's when you can expect for a pullback to happen. Notice I said expect. It might not always happen, but you can expect for it to pull back. Why? Because we have people who know that they're trying to make as much money as they can before the end of the actual trading day. So what would you do? You would try to either pull out or you would try to get in real quick. So just know that people, the market will pull back on you. So that's usually like if you're trading on a Euro USD, that one is very famous of pulling back. I had explained this before in the training, but a lot of pairs, and if you guys want to write this down, you can. If you don't, you could just don't worry about it. This is being recorded, and this will be inside of the members area. All right. But what happens at the end of the day, or at the end of a candle, like a 1 hour candle, well, let's say the beginning of the hour, the first 10 minutes might be a little unpredictable. All right. The first 10 minutes, you might want to stay out of the market. Now, I'm not saying all the time. This is just, over time, me back testing. This is what I come to realize. The first 10 minutes can be unpredictable. It might open up bearish, and then it'll then turn bullish, or vice versa. Around the 15-minute mark, whatever way the candle's going, usually that's the way it's going to be. That's not always the case. I don't want you guys to I just want you to back test this so you can sort of see a trend for yourself. So 15 minutes, it'll start doing, it's going to start going in its normal direction. Just before the half hour, it'll pull back. So like 5 minutes before, expect a pullback. Like at the 35-minute mark, you might have it going back in the normal direction. And then, like I said, like 10 minutes before the closure of that hour candle, it might pull back on you. That's just a little tip, guys, that trade on a smaller time frame. All right. Now that's as I always say, I'm gonna leave questions for last, and anything that's not covered, I can cover with the individuals in a, within your email. And one thing that I want to say about the GBP and ZD, someone asked a question that I feel is necessary to answer. Well, you guys got to look at. You guys remember what I told you about moving averages. The market will respect moving averages. All right. So you see that the market right now is heading up. What's above the move? I mean, what's above the market? The moving average. So we can probably expect for. Notice I said probably. Notice I said expect for the market to travel a couple hundred pips before. Now, like I said, probably and expect. It could easily stop where it is now and go back down. But however, remember the rule. When the market is above the yellow and the red, the market is in an uptrend. When it's below it, it's in a downtrend. So the market will ultimately try to keep, if the market is going above, it's going to get above the yellow and the red. And then it's going to stay above it for some time. Just like when it's below it, it'll hit off the moving average, bounce off of it, because it's using it as a shield. Just like here, the market went up to the moving average, what did it do? Back down. Went up to the moving average, came back down. That's why the market will hold steady on the moving average, as you see. All right? As you see, it will not break it. So keep that in mind. I'm telling you, keep that in mind. For those of you who trade, you're more of a short-term trader, but you have long-term objectives, you want to keep that in mind. If you want to trade on something, you want to make some money, I would advise you to trade the yellow and the red. And if the market is underneath the yellow and the red, then you want to make sure you're trading on that. Like the market broke below it, you enter on this candle, and you stay below it until it shows signs, like going sideways, drop down to support, showing signs of a retracement. And that's what happened. Then it broke back down. So right now we're showing signs of it going up, and engulfing candle going up. So we can probably expect a little bit of resistance at this level though. But you figure that's a couple hundred pips away. So if you're in the profit, I want you guys to know that every so often, so that you can secure your profit, take your profit if you so choose to do so. I'm not telling you what to do, but a word to the wise is always sufficient. I want you to, if you can take if you feel comfortable taking your profit, then do so. That way, it's your money. All right. Now, we're going to analyze this chart real quick. It's not going to take that long because we already know about this pair. So we're not going to hang on this too long. All right. So we're at a noticeable level of support. Or at least that's where we were leaving. And now the market is going up. Now, remember, whatever is support will turn resistance, and whatever was resistance will now be support, depending on which side the market is on of your support and resistance. So all the levels that were supported going down from previous price action will more than likely be resisted going up. All right? So that's why it's still key to have your lines drawn on your charts. Okay? For those of you who are in on this trade, I want you guys to just think about something really quick. Just think about this real quick. Now I'm going to go to the Euro USD. I don't even need to go to it. I know the Euro USD as well because I used to trade it heavy. The Euro USD made a major drop in 2014. I'm going to share something with you guys that happened last night. I got a message last night from someone within a group said that the website was down. So I panicked because I know what I put into it. I panicked. I called my registrar. I spoke to them. I looked at my server, made sure things were intact. I did some testing. Everything looked good. And then I realized what the glitch was. You guys probably didn't even notice it, but I had to fix some things. But nonetheless, the gentleman that I talked to, and it's amazing how you become attracted to people. The gentleman that I talked to, he was actually in on some of the same trades that I traded on in 2014. All right. And when I tell you, you tend to attract things into your life. Well, I don't get too deep into that, but it's just amazing how I happened to be on the phone with the gentleman who knew Forex, and he's interested in joining, and he needs training because he made a lot of money and he lost all his money, and he wants to get trained up again. 2 days prior, when I was trying to get the server and everything together, talked to a gentleman, got off the line, called back to customer service, and guess who's back on the line with me? The same guy. He too, he traded lightly. He's not nothing like you all, or even nowhere close to someone that's a daily trader. He told me he traded lightly, he played around with it every once in a while. But it's just amazing how things happen. The reason why I'm telling you this is this. When the gentleman I talked to last night told me about he traded the euro, he said the USD euro. I had to correct him, no, it's the euro USD. He said, yeah, it's the euro USD. He said, I got in on that trade in 2014, like May sometime, and that's when the market went from like 136 and it dropped. And that was, let's go to the monthly. All right, here. This candle, May. All right, you had the great pullback. All right, and he played this. He traded this. A pullback of 100 pips. That's not much of a pullback on the GBP NZD, but that's a great size pullback on this pair. From there, if you gotten in on this trade, let's just see if you traded the pullback. If you gotten in, that's how much money you could have made. That's how many pips you could have made. Almost 3,500 pips, all within a year's time. And imagine if you had a compounding system in place. Amazing. When I tell you guys to focus on long term, it's for a reason, not just to sound good. Most of you are realizing it with your trades of late. But this gentleman, he traded on this, and he said he didn't tell me the dollar, but he said he made thousands of dollars. And he says, Scott, it was really because I was going with the consensus of what everybody else said. And I really didn't know what I was doing, but I made a lot of money. And I lost it all because I didn't know. And he said, but having you on the phone is like a confirmation of what he said. So we exchanged information, and I might welcome him to the group one of these days. But I want you guys to know that if you are looking at those major levels, major support and resistance levels, you can definitely find profit. And it takes nothing more than 5 to 10 minutes of you analyzing the charts of your own time. That's all you need to do. And so basically, you guys, what I wanted to share with you is this. On the Euro USD, the market was at, I wouldn't necessarily say an all-time high, but you see the market was, let's go back out, let's do this. You can see the pattern here, very clear pattern, what it was doing. All right, and even now, you can still see that it's holding true to the same, the same channel. All right, so whether it's something. Now this is the monthly, by the way. This is the monthly, so it's still holding true. What I want to share with you guys is this. If you had seen this, all these setups, Seeing it break moves down, bouncing off here, went up, came back down, went up, came back down, went up, came back down. You will be prepared for a move up at a certain period of time. Now we know on this pair here, the market is nowhere close to where it could be. All right, it's nowhere close. Matter of fact, it's at the 50% retrace. If I had a guess on that, I would say it's at the 50% retrace. And I don't use Fibonacci, but because I know how to use it, I'm going to use it. Actually, I was wrong.
38.2.
It's not at the 50%, but it's at the 38.2. Now, and it's dancing around at 38.2. All right. For those of you who are Fibonacci junkies, I hope that I help you feel a little better. You know, having me use Fibonacci, shame on you.
Okay.
You know, but nonetheless, you guys, I just wanted you guys to see that I want this to tie into where we're going. All right. If the market came from here, and this is the low, this being an all-time high, and the market is here, then just imagine the profit that you can make either way. You stand to make a lot of money. All you have to do is be in the right direction. That's it. So let's go back to the GBP NZB. Now we already know that 372, 371 is the all-time high for the GBP NZB. Let's move this out of the way. Let's move this. Like 371 is the high, okay? The low is 177, where we came from. And that's where the market is. So you mean to tell me a blind man can see this, that the market has all of this room to travel. All of that room to travel, potentially. Over 19,000 full pips. If it goes below, then you know where to go. You just ride it until it stops and show a sign of going sideways or show signs of going back up. And that's it. But at this point, at this juncture, we're at an all-time low, and more than likely it's going to go up, and that's where it's showing you signs of. So for you all that are in on this trade, I'm going to tell you to pace yourself. Do not over leverage your account, because you could be in on a trade that could run for a number of months. I'll say that. All right. Now, so that's, I want you guys to know that. That's the possibility. But understand that we have levels in between here that we would have to bump off and hit off and jump here. And so it's going to take time to get there. It's just not a straight run. I mean, granted, from September to July, we've dropped a number of pips. Over almost 7,000 pips. So even from here to here, it was done in 10 months. It can happen. So you're at the forefront. So get ready. I'm telling you. Now, I'm not telling you that it's going to go up. I'm telling you that the likelihood of it going up is highly probable. Because there is a reason why the market planted its foot in the soil here, came up and planted its foot again. All right? Does that make sense to everybody? All right. All right. So I just want to make sure you guys understand it. So now let's go ahead and move forward. So, I mean, do we have a clear understanding of what's probable on this pair? Do I need to elaborate any further? All right, just 1 second, you guys. All right, all right. All right, so I am now back. I definitely appreciate you guys. So since we have a thorough understanding of this, let's move on to another pair. There were a few that I wanted to really lean on. This is one of them, the Euro AUD. Who all trades the Euro AUD? Who trades this pair? All right, so we're all right. So this is the Euro AUD, and we're gonna do a little research on this now. And this would have been a nice wave up, nice wave down. I see something that sticks out. We have a nice level of support here. And I'm going to look left and make sure that look how well that is. So we know this is a good level. Let me make sure this was, let's see, okay, no, that wasn't close. Nowhere close to it. We know this is a good level. All right, so basically, by analyzing this, we see that we're at a point where the market can go up considerably. All right, you know what's funny is that I remember if you guys look back on I actually trade this, and I traded this from this level. This market was ranging. It's ranging, consolidating. It was doing a little bit of both, but it was like this for a while, like 3 weeks. And then it didn't, like normally it'll go up, it'll range, and it'll just drop. It just gradually just went down. And then in recent days, following the Brexit, it just kind of humbled, it just fell down. But we're at a great level right now. You guys keep this on your radar. See this setup? Yeah, one day the market moved. It had let's say 130 pip range. All right, and it closed out almost where it opened. And then also the next day, let's examine the days. So this was okay. So it was a day apart. The next day, it went down through support, but it came back up, and that's when it went up, and it's been going up ever since. So these are the kind of things I want you guys to pay attention to. At what point does the market make a turnaround, a major turnaround? And it made a major turnaround at this point. So did it make a major turnaround here. it might not have been as high, but you look at where it came from and where it went. It came from all the way up here, 1,800 pips away, and it went up as high as 1,800 pips, just about. But the signal was very clear at that level. So if you have your support and resistance on your chart, you could see this and you could take profit all the time. The more and more you guys see stuff like this, it's going to become second nature to you guys. I'm telling you. I can just scan a chart and say, okay, it's about to set up. You guys are going to be able to do the same thing. All right? And what it takes is repeatability. All right? You have to continue to backtest, repeat these methods and these instructions that I give you, so that you can tune in and zone in and hone in rather on these market terms. You know? So I mean, do you guys, I want to make sure that you guys see how obvious this was. Do you guys see that? All right, great. Just want to make sure, because these are signals like this. When you catch a signal like this, you're at the forefront of a move, just like you do here. You're at the forefront of a move. And the reason why you're at the forefront of a move here is because of your support and resistance. Just like here. You see that this level was a major level there, and look where we're at now. All right? I don't even have to tell anybody when to get in on this trade. You guys should already know. All right? I shouldn't have to tell you, you know, I think we've gone through perfect entry and all that, but we're not going to cover perfect entry in this training. This is strictly for analyzing the charts. So basically, we see that we're at a major level, definitely within the last year. All right. Within the last year, this market has touched this level 4 times. This is the 4th time. So, like the example I normally use, if you keep doing the same thing with the same amount of force, you will probably get the same results. So maybe the market needs to go all the way up in order for it to come down and break through. You know, that's just looking at it logically. Forex logic. That's all it is. But not to say that it can't break it. Not to say that it can't break it. Not to say that it won't break it. I've seen it happen. But it doesn't matter if it breaks it or not. It doesn't matter if it respects your support and resistance line. You know how to trade whether or not it breaks it or respects it. Doesn't matter. You're not. You're two-dimensional. So I want you guys to really pay attention to this stuff. This will be an opportunity for a lot of you guys to make some money. So just make a note of this. Keep it in the back of your mind. Euro AUD showing signs of the market is at support, possible retracement or possible bounce. All right. I don't really have to go too much into the GBP CAD because we all know that actually I am gonna do this. I am going to do this because the market right now is at a level. All right. For those of you who are trading this, you see that it's at a level. This is like a wall. You have a couple walls here. One here. Although you have wicks down here, let me move this other way. Although you have wicks down here, the market was holding steady at this level. And that's where the market is. Not saying that it will not go up, it won't penetrate that level, that minor level. I would consider it a major, but you have a much clearer major level above it, where I would expect to see some type of stalling in this area, to be honest with you, because you have this containment here, which is a gap, and then you also have a bit of stalling or sideways or consolidation, very brief at this level as well. If it breaks above it, that's great, but I would expect it. Notice I said expect it. I would expect it to stop at this. If not here, definitely here. And if it keeps penetrating, above this one and then this one, the gap, I would be very surprised without going sideways. You guys can keep this one on your radar. When would I trade this? If I'm actually in on this trade. I got in on this trade when I got in on the GBP NZD. I got in on this one after though. This trade right here, I will probably just wait till the morning to see what happens, and then I will probably take money. If it's not, I'll probably take profit if it's showing signs that it's going to go back down, the same. Because usually, sometimes what happens at these containment areas, you'll get one high volume candle, and then you'll get sort of like a railroad effect, a candle going down the same size, and then the next candle open and it might go down. So that's just something that just to keep in hindsight. Now, if you notice something, you can see a noticeable pattern with these three, very similar in the way that they move. But you'll also notice that some are faster than the other. GBP CAD is definitely faster in terms of how far it traveled, but the volume is not in this pair like it is the GBP NZD. In fact, let's measure how far it traveled since then. 446 pips. And the move here is much bigger. And it's just over where the GBP was. AUD, it's this one is probably still showing a sign that it can go up because there was no type of containments or anything along its way up. So I would probably expect for this one to have a better shot at going up until it reaches the wall here, and to make a little profit. As you see, it's definitely this is why we were focused on this trade, because definitely at a level of support. For those of you who are new, sort of follow along. I know you're excited to sit in on your first training, but just follow along. There's a 3-step procedure for placing a trade that I'm not going over in this training, because I want this to be about analyzing the chart, and I want to take away from it. In the back office, if you have access, if you don't, there is a couple videos on the perfect entry, and it'll cover all of that. So let's move on down the line. Let's remove this. We're going to focus on the Euro USD. Who all trade the Euro USD faithfully? Okay. Now, a lot of people like the Euro USD, very liquid. You pop a trade in, you look at your iPhone, you look back and you're in the money. Sometimes it can be just like that. In fact, when the market was moving down from May 2014, it was almost like no way you could lose. You could literally put a trade in and walk away and come back, and it was just falling forever. The Euro USD is not a pair that I care to trade. Definitely not right now. Because it's still trending, ranging from its low. I need to have, I've been waiting for it to break above this level right here. Once you get above that level, that's when I would wait to get in. Do you guys know anything about wicks? Do you guys really know about wicks? For those of you who trade the like the hourly, I'm gonna tell you something about wicks on the hourly chart. All right. A lot of times when you have wicks on the hourly chart that are open, like let's just say the market 2014. Let's go back to 2014. Because this is what the market kept doing. Maybe it won't let me go back that far. But let's just say you had an open wick like right here. And coming down, you have a lot of wicks that are open, meaning the market didn't, just like a gap. In order for it to be an open wick, the market needs, in order to be a closed wick, in order for it to remain open, the market needs not to go up and close the wick. The market will, let me zoom in. The market will need to continue going down. Just like this wick is open, this wick is open. These three wicks are open. But for the market starts to retrace and go back up, a lot of times, this is what happens. If you guys trade the hourly chart, for those of you who trade it, this is what tends to happen at times. You can almost guarantee where the market is going to go because it'll go down, it'll create a wick, push down, and it'll leave that wick open, and it'll keep going down, keep going down. Then all of a sudden you notice for 3 days straight it's retracing, hammering up, and it'll actually create all this movement here. And mind you, it's so much time has gone by, you don't know that there's an open wick, and what it's doing is riding up to that open wick. And let's just see. And that's what really happens. It'll ride all the way up to an open wick, and you wouldn't even know where it's going because you can't see all that on the hour chart. You can see it on a long term because it doesn't take a lot of scrolling back to see that kind of stuff. Okay, I was thinking that maybe that was the same one, but nonetheless, it will do it. It will ride up and it'll close the wick. And even like here, this is where the wick was over there. You see it didn't just keep going. It sort of stopped and it went above. But that's just something else for you to write down. Maybe do some back testing on if you want. Giving you guys some secrets and tell you. Let's see. Yeah, so I don't particularly trade this pair as often. I'm waiting for it to break this level. Once it breaks this level, then I would probably trade it because it's more obvious where it's going. But while it's down in the state that it's in, that it's been in there for, you figure the drop from here to here was like 6 to 7 months. No, actually no, probably about 9, 10 months, and then it's just been ranging ever since. So I don't like ranges as much. You know, you can trade them. You just gotta have great support resistance levels. That's all it's about. You know. So I would wait until the market shot above it, because then you're in a trending market. You can almost guarantee where it's going to go. A lot of times, if the market is trending, it'll create zones like this where you can see the market traveling very clear, and how it's just bouncing. Yes, it can go out, but you know, just like football, you go back in. You know, that's just something that I would definitely, if you consider trading this pair, watch how clear the move will be once it gets above the 117. That's, you know, so you got to break down the chart. There's so much open space over here. So much space and room to do so much. So I would definitely expect for the market to go over there at some point. It's no, I would just let the market makers determine that. I see something. Okay, now it's underneath your trend. And it broke below it. It has been respecting it. It broke below it. This was probably the Brexit, but nonetheless, it's below. It's been trying to go back above. It could simply go above because it's showing that it's stalling. This is the daily chart. So when you start seeing low volume like this, there's something going on. You can expect something to happen. You know, a major move is probably impending. That's what I would think. To get out of that area. Whenever you see consolidation, especially small candles like that, you wanna you know, expect the best for your account, but just expect the worst for somebody else. You know. Let's see. 1 second. Yeah, let's do gold. Gold has been made. Gold actually made. Well, let me explain something about gold. I was in on a trade on gold. That's not something I trade all the time, but I had traded gold, and I was in on that trade for, I kid you guys not, probably about a month. And the profit that I made on that trade was horrific. It was terrible. Didn't lose, but it just wasn't for that amount of time. It just didn't pan out, you know, the way that I had expected. The reason being is that I didn't get in at a good time. I don't trade that market as often. Well, I'll say if I had, if I noticed when the market was going to turn around, because it turned around abruptly, if I noticed it right then and there, I would have been pretty decent with the profit. But the profit wasn't for the amount of time. That's what I mean. For the amount of time, it didn't equate much. But it turned out to be a profitable trade. That's the main thing. But it taught me a lesson. Stick with what I know. Teach you a lesson every time. And where that was, I think I got in. I don't think it was here. I think it was back in here. I think it was back in here. I was in on a buy. The market, yeah, I think it was in this area. So I noticed that the market was sort of sitting here. This is the kind of market that I like. You know, you can see can you guys see a pattern here? See, that's what you got to train your eyes. You see a pattern. Big candle up, goes up, come down. Big candle up, goes up, come down. Looks like there's a pattern. Can you guys see that? Okay. See, it's those subtle things in the market that price action will reveal. And when you see something out of the ordinary, you know that, hold on now, it wasn't doing that all along. Why is it doing that now? Okay, well, it's obvious. They're going to do something different. Yeah, this isn't something that I trade. While gold can be pretty fast at times, it's just not consistent enough for me. Then it moves at weird times of the day. I don't really like that. Okay, so let's if I were to trade this right now, I would definitely be, I would definitely believe that it's going to go up. Let me do a thorough investigation on this real quick. Just bear with me real quick, you guys. Notice that when I draw my lines on, I'm not trying to line it up perfectly. I just draw it on because the market isn't there. Only when the market nears that area is when I adjust it accordingly. This is just a ballpark, just to know that in this area or this zone, we have major support resistance. So all you're trying to do, you don't want to, become a scientist at this. It's just keep it as simple as you can get it. This is where it gets funky in here. But I think, yeah, that's a good level. Yeah, that's a good level. Let's see, this one. Yeah, I need to see what's really going on here because it's okay. So that's why it's probably doing that. That's probably why. Let me make this. Let's put that. Okay, yeah. So that's why we're getting that as we are. See that? That's why we're getting that. Of course we have an engulfing candle in there. We have wicks at the top. We have wicks at the top. So that's how we're getting that pullback right now. And as you see, this level is heavily supported and resisted. So for those of you who are trading this, I would definitely watch this level right here. You have the potential of it going back down to recent levels. It's talking 1,400 pips. But if you're going to trade this, I would definitely probably drop down to the 4 hour. And matter of fact, let me finish doing this, and then we can drop down and gauge the. You have a lot of price action in here. You really have to. You want to definitely work hard in here. Okay, something like that. See, this is what I would do. I would take my profit at this level and then reassess everything. You know, don't try to leave your trade running when you're unsure. You know, that's 250 pips away. So you have enough profit to be happy with what you gain. But that's provided it keeps going down, you know. I wish well, I don't trade this market like that. I would definitely have to put one here. If the market came down to this point after hitting this level twice, then it drove its way all the way up and pulled back. So I would definitely consider that, you know, a level to watch. So let me check this blue level. Let's go with something like that. Yeah, this is definitely a good level. Oh yeah, definitely a good level. Definitely a good level. Yeah, I like this a lot. I like this level. That's a good level. So yeah, I would definitely consider this. For those of you who are trading this, you have a stair-stepper opportunity where you could take the profit here and take it here. And then if you wanted to drill on your, say you want to drill on your moving averages, you can do so. Just to get a little idea as to what's going on. So the market itself has came to a low, traveled up, and now it's bouncing off of that level. See, the market came from, okay, so it came from down here. So it came from down there, came up, swooped around, came back down, ranged a little bit, broke through, came back up. So, you know, it could definitely afford to go down. But if you see that, you see the yellow is bending because the red is pulling it down. Remember, the moving averages are like strings. And, oh, this is, yeah. So this is, okay, so the daily just kicked in for 6 o'clock on the oil, on gold. So now we saw the actual candle open up, and we see now that the yellow is pointing down, diagonally. So we could, I would definitely watch this. I will watch it because not that it can't go up any higher, the fact that if it repeats the same pattern again, it might have room to come down to this point and then go back up. See what I'm saying? Like that's the pattern that it's showing. Go up, come down. Go up, come down. Go up, and then come back down to the blue. So just be watchful of this. I wouldn't. If you're in it, you're in it. But I wouldn't be putting no new trades on this. Not until I saw a clear direction as to where it's going. Let me do GBP JPY. Let's analyze this bad boy. This one actually I was looking at earlier. It's going up on a daily, just like the other GBPs. So the only difference is, like I've always told you guys got to focus on your gaps. You hear that, Morgan? The gaps. This was a gap, and you see where the market went right to the gap. That's why I told you guys, like on a GBP NZD, with a GBP CAD, this is a zone here because this is where consolidation was. It ran right to it, and this area is a gap. So we can expect it to, to possibly break this level or go down. And well, let's say firstly, go down maybe, or if it breaks this level, go to here for sure. Because look at the GBP JPY. Sometimes you can get clues from your other pairs that are in the same family. This one did the same thing, ran right up to the gap, didn't break it, backed off. And this candle is going to really answer a lot of people's question right now. I know mine. If I traded this, I wouldn't get in it right now. I would wait for this candle to show me what the rest of the week's going to be like. That's what I would do. So let me break this one down. Let's see what's what. See this right here. See, this is what I'm talking about. See how obvious this stuff be? It's amazing. Market came all the way up, came all the way back down, planted its foot there, just skimmed it, went all the way up, and now look where it's at now. It came here. Now that doesn't mean that it's going to go down just because it's there and this here. We just want to expect if the market is going to go down for it to plant its foot here at that level. But we see that's not what it's not following that pattern right now. It's doing its own thing, doing its own agenda. So let me put this back up. So now, actually, let me go back down and let me put these levels on. So you have some, yeah, there's a lot of stuff going on in here. Oh yeah, oh yeah, oh yeah. See, this is what. Right at the gap, you have resistance, and that's where it's holding steady. But it can still break through it. The GBP JPY is a fast moving pair. I just don't trade it. This bad boy moves. Probably one of the fastest. For those of you that like this pair, don't get too excited. That was just Brexit. But yesterday, 527 pips. Come on now. It's making a lot of noise over there. That's why I say it's definitely fast. It's probably a little faster than the GBP JPY, but I love the GBP JPY. I'm sorry, I love the GBP NZD. I know a lot of you would second that. Yeah, I hear you, Morgan. How's you doing that, John? How's you doing the JPY on the GBP JPY? I know that's right. Okay, good. You're in profit. Okay. Good afternoon. As far as the prime minister situation stepping down, for those of you that know me, I don't really care for the news like that because I hate to be blunt, but I'm just going to speak the truth. The news is just there just to control the minds of traders. That's all it is. So I really don't worry about it. And that's any news. I mean, I put it like this. regardless of whatever news that comes out, and just like you guys have seen when we traded the non-farm payroll last Thursday when we did we had a training session. I showed you guys how to make money on the non-farm payroll. The market's going to move anyway. You just got to know which way it's going to move. That might sound like, okay, well, if it was that simple, everybody would be making money. True, but however, don't fall for the initial move, because usually the initial move is the fake move. Just let the market do what it do, and then just ride its coattail afterwards. All right. That's right. I talked to someone today about playing with the stop losses. You know, you guys wouldn't imagine how many emails that I read or have read today over the last couple of days. But so many people within our group are actually profitable. Whether your demo, it's just amazing to see that you guys are really paying attention, and that's what really makes me feel good. When you're trading, for those of you that do not know this, a lot of the more seasoned traders in the group been around for some time. You guys already know that. You know, they have stock hunters out there that will definitely, you know, they can see your stocks. So I don't trade with it. I can show you guys how to trade with it. To be honest with you, I would rather not, but I want you guys to. I don't want you guys. If you guys aren't comfortable with it, then I will train you to do it. In fact, I have a video in the back. How many of you watched or at least saw the video, the title of the video, how to use a stop loss in the back? For those of you that have access, because I know I have a video back there, and you know, once you learn how to use a stop loss, you'll you know, it can make you or break you. But I choose not to use it. Let's see. So I don't mess with stop losses. They, you know, just the fact that someone knowing that where I'm at in the market, it isn't cool. I'd rather just trade and if I see the market going against me, put it like this, you guys. If you're in on a trade, it's your money, you're trading. Why are you gonna let a system automatically close your trade for you? It's your trade. You shut it. The market is going against you, and you don't have hope that, or you don't have confidence that it's gonna go in your direction for a while. Just shut the trade. If I had $500 in my account and I had a trade that was running and it had gone against me and it's at $25 or so, and I'm like, man, it's just going up to $30. It's better me shutting the trade at $30 and having $470 than to keep letting it run and hoping and praying that maybe it'll turn around when I get to 400. Because the market isn't forgiving. It will take your money and it'll turn right around as soon as it drains your account. So if it hasn't happened to you yet, keep trading, not closing your trade. It'll eventually happen to you. I don't want it to happen to anybody. So I want you guys to practice. You know, if you're getting in at a good location anyway, you should know, you should have an idea or have a feel for how far it could possibly, go against you. And then if you're getting it at a good location, you should be comfortable with it maybe going against you a little bit. But if you're just winging it, just getting in because the market is open and putting in the trade, you're in for a disaster. Because the market, you don't know the temperament at that time of the market, whether it's high volatility or what. You don't know your levels. If you just open up your trade, open up your chart, just getting in because the candle is bullish, wrong idea. So let me see if maybe there's let's do USD CAD. I like the USD CAD. All right, the USD CAD, you guys notice something. Let me go all the way out. So I'm going to draw something here. That's a major term. Let's see how far off that is of 124. Oh, that's 90. Nah, that's way off. Okay, well, we see the market planted its foot here, and then went up. Came back down. Now it's gone back up. Now, the market is now ranging. Yeah, that's the funny thing about it. It's ranging and it has a lot of room to go wherever it's going to go. This pair here, we know that's a good one there. We know that's a good one. This pair here, I would probably just have to draw your lines on and see what the market is really doing. It's definitely respecting this as a resistance, that's for sure. So if nothing else, you can at least take profit when the market bounces off, resistance. You can possibly get into the market after confirmation. Yeah, this is definitely a level to watch. And whether this is actually not bad. This isn't bad. Because if it broke down to this level, when it breaks down below here, that's quite significant because let me change this. Based on my rating, I would say that this is a pretty decent level where it's at. It would be nice if it was down here though, because then at least you know it's going to either go up to this point instead of, okay, is it going to break it or keep going down. So you do have a place to take your profit, essentially. Let's draw this one on. Actually, you have a preliminary. You can take profit here. This is definitely a level. So is this one. So you have two levels that you can take profit. If it breaks above it, it's you know where it's going. I would take it back to this level, but of course having your lines drawn on. But however, the market has not. Take it back. It has. All up in here, these levels here are. Actually, no, that was actually way higher. That was this. So this is the high part. Okay. All right. So this level here must be pretty significant. This is the level that I want. This level must be pretty good. And as you see, the white level, it is. That was a good level. Yeah, with this one, I would just probably expect it to bounce along. You know, set your lines where I have them and bounce along. Um, and of course, only trade off of these levels. You know, using these three levels as support and resistance. And if you have to add another one, you could. I even see another one. If I drop to the 4 hour, I would probably see the one in the middle here. It's pretty, it's like a sliding scale, this one. Oh yeah, I like that. That's where I will leave it. I will leave it right there. And whenever the market comes to it, I can adjust it accordingly. But it's right there, and that's why you're getting the bullish movement. So I would expect, actually, I would expect for the next 4 hours, I would be surprised for it to go back down. I would probably expect it to go up. But looking at the daily chart, it might show you otherwise. But just remember, what's happening here is just a fraction of what, what's happening on a 4 hour is just a fraction of what this will show. That big movement there was just this little bit. So if you can read this right, it doesn't even matter what these candles show. It will not matter. So, yes, I actually don't even trade off of the 4 hour, but you can find signals. I had one student tell me that he found a signal that was like, it was just screaming at him the other day on a GBP NZD on a 4 hour. It was a doji at, I believe he said support, and then it was a bullish candle. Yeah, it was a doji at support on a 4 hour, and then it was a bullish candle that followed it. That's what he said. And it was like very obvious. Yeah. Whichever one, I guess he must have got in. He must have got in here, I guess. I didn't look at it, but he said it was a doji. But I mean, whoever got in on this trade, you made money. It doesn't even matter. You definitely made money. So let's see. Let me see. Is there another one that I want to go over? Let me look at the last but not least, USD/JPY. Well, this is a pretty simple one here. That's when I put one here, just for the sake of it. I like to draw my lines on the obvious things that really stick out. So I didn't even really need to look at this to know that it's bouncing off that level. There's just a lot of support at that level, and that's why although it broke through, came back up. So we could be at the forefront of a nice move going back up. You know, considering that the JPY is falling and falling, this could be, or it could be a retrace and then fall back down. It could be. But as always, you only get it on the obvious. You only get it on the confirmation. Like for instance, if your line was here, you have a bullish engulfing candle. this day would have been nothing but profit. So that's a very easy way to look at it. So that's what I would do. Yeah, that's what I would do. It's funny, it just went right around, boom, straight around. All right. Well, we're actually pushing on an hour and a half now. I guess we've gone through a number of pairs, quite a few, not a whole lot, but we've gone through enough where I'm sure that some of you have were able to take down some notes in terms of the certain pairs that we've looked at that have opportunities that's we're right at that level, right? Okay, just want to make sure. All right, just want to make sure. I like to make sure, that's what the analyzing of the charts, give you guys a little idea of how I look at the charts.